All right, all right, all right. Welcome to our weekly Bitcoin deep dive, everyone. I'm enthused, an educator on the strength trading system, and we're going to start on Bitcoin on KuCoin on the 3-day time frame. So to save time, I'm going to try to point out these drawings as opposed to redrawing everything. So we have our monthly higher lows in orange. So here's your primary monthly higher low at $28,801, up to the all-time high at $69,028. The swing low to swing high Fibonacci retracement. Here's your 88.6% retracement. Due to the size of the pullback and price, realizing this 88% retracement means that it is more likely than less likely on the first 3-day push up to print a lower high relative to the prior high. That is the statistically most likely probability, right? These arrows here point out our series of 3-day higher lows, right? These 2 hours here point out our series of 3-day lower highs. So when the price pulled back, we had a 3-day equilibrium pattern that dynamically broke into an ascending triangle style candlestick pattern. And on the 3-day time frame, we now have a bull break of this dynamic candlestick pattern. If we take the daily measured move target for this ascending triangle pattern, right? Here's, if you're being conservative, we're going to go from the candle closes, right? And if we extrapolate this out from the break, this puts us right in the golden pocket range on KuCoin. The golden pocket range is between $55,234 and $56,389 on KuCoin. So we would not be surprised if we zoom out to the 3-day time frame that the first push up, right, to print the next 3-day lower high could hit the golden pocket region. I think this is one of the more bullish scenarios, right? What is one of the more bearish scenarios? Well, a more bearish scenario would be a push up. Here's your next 3-day lower high to contend with at $52,072, which is nearly confluent with the 50% swing high to swing low bear hammer, the 50% retracement at $50,973, right? So another way that this could play out, if we get a bullish move off of this push up, is the next place we have to take a look on a 3-day push up is at this 50% retracement. And if price pauses here and cannot get over this 50% retracement and cannot get over prior, looking left for the clues, 3-day lower high resistance, the statistical probabilities are that price is more likely and less likely to challenge the prior lows, but not necessarily break the pivot lower lows, right? So in short, our most bullish scenario would be a push up, a 3-day higher low, and then 3-day higher highs, minimally testing this 50% retracements. The bulls want the price to blow through this level and push up at least to this golden pocket region, right, to make the most likely scenario on a pullback a higher low versus the prior low and not challenge. The bulls don't want price to challenge the prior lows, right? It's going to be a big, scary pullback for the bulls, right? What else could happen? What else could happen if we zoom into the daily time frame? One thing I'm noting here on the daily. Now, guys, things are certainly bullish, and we're trending the daily 12-period exponential moving average here in blue, right? But this does look a little bear flaggish on the daily time frame. This looks like a little bear flaggish style pattern where we're potentially exhausting the bulls below the prior daily lower high, right? So actually, the prior daily higher high. This bull flag is setting up below the prior daily higher high, right? So if we get a pullback, if we get a bear break of this daily bear flaggish style candlestick pattern, what is our worst case scenario? Well, if we look left for clues in our 3-day swing low to swing highs, we have price realizing the 88% retracement on this swing low to this swing high in the monthly. Here it is, right? If you take your Fibonacci retracement tool and swing low to high here, swing low from this high, this low to the 3-day lower high, right? Your 88% retracement is right here. Price pulled back and realized the 88.6% retracement. We need to adjust this one. Let's go ahead and erase this one. Let's do another one. What we need to do is focus on this 3-day pivot right here, right? So we're going to pick, this is the 3-day, let me zoom out a little bit, the 3-day higher low, right? So this is your tertiary 3-day higher low. I believe the worst case scenario for the bulls, what is the most likely worst case scenario for the bulls, is a pullback to the tertiary 88.6% retracement. This would scare the lights out of all the bulls, right? So if we get the most bearish price action, the place that I'm going to be taking a look, and we went over this last week, If we went over this last week, is this 88% retracement on a pullback right now? Potentially, if we get the most bearish scenario, right, the most bearish scenario If we had our drawings, we could see the 3-day 200 period exponential moving average. So the most bearish scenario would likely be confluent with the 3-day. I could do better than that. I could do better than that, guys. Let's do better than that. Let's go ahead and do better than that. There we go. Swoosh. That's much better than that. That's a representation of your 3-day 200 period exponential moving average, right? So if we get a bear break and dramatic bearish follow through, right? I'm not saying this is the most likely scenario, but we have to be prepared for all scenarios in trading, right? Is we'd be able to take a look at this ascending triangle trend line right here, which is confluent with the 88% retracement. We have 288% realization is back here on the bull side, right? And potentially we could bull flag down bear flag down and realize this 88% of retracement, which may be confluent with the 3-day 200 EMA and the ascending triangle 3-day trend line, right? The dynamic candlestick pattern of the ascending triangle. Let's go ahead and erase our squiggles. So things are bullish, guys. We are bullish on very many time frames. We have broken to daily highs and higher highs. We've changed the daily trend, right? We had a pump the brake scenario, which I've gone on the live stream. So I'm going to zoom in. I'm going to zoom in here. And, what we were talking about in the stream team group, right? Here's our little bear flaggish style pattern. And I'm going to have to zoom in. So here's your highs, right? Here's your daily higher high at $48,195, right? Our stream team was ready for a pullback, right? We had everybody well prepared for a pullback to between the 1 hour and 4 hour 200 EMA, right? So here's your 4 hour 200 EMA. I actually had some stink orders on ENS and Litecoin in this area. I actually got filled on ENS, right? Price pulled back to the 2 hour 200 EMA and found support, right? So what is the little, you guys know my spidey senses tend to play out, right? Let's go ahead and erase this bear flag right here. Let me point something out to you guys. My spidey senses were tingling, and we had a little sense. Now, after this daily higher high on the first 15-minute oversold conditions, let's look at a relative strength index. We would anticipate some sort of a bounce. We had ideal 15-minute lows and lower lows for strength traders, right? So here's your primary 15-minute low. Here's your secondary 15-minute lower low, and here's your tertiary, perfect with a bullwick 15-minute tertiary lower low. We had ideal bullish divergence, right? This is exactly what we're looking for in a bounce off of 32%. More often than not, on your first 15-minute oversold conditions from the highs, you would see a bounce minimally to the 15-minute 200 EMA. We got no bounce. Nothing happened. We had dramatically further bearish follow through. We click out to the 1 hour time frame. Typically speaking, after daily higher highs, you pull back, you're going to get a bullish reaction on the first hourly oversold conditions. Let's erase these squiggles here. Let's erase these squiggles. Well, we get our first hourly oversold condition on this 15-minute primary, secondary, tertiary. There's no bounce here. We get dramatically lower lows. We get an embedded oversold condition on the hourly time frame and no bounce. We have no bounce here, no bounce here. We have to click all the way out to the 4 hour time frame. Let's go ahead and erase our squiggles one more time, right? Whoops. Let's redo that. Let's go ahead and erase our squiggles, right? And then we get oversold on the 4 hour time frame for the first time, and then we get a bounce to a lower high, right? And here if we look left for clues, here's your 4 hour lower high. Price needed to get above this level to give the bull some confidence right here, right? So these are how this high, right, and the oversold pullback that we were well anticipated for played out was unusual, very, very unusual. And so that's what my spidey senses are tingling, makes me believe that potentially we may find a little resistance at the bear hammer on the 3-day time frame. So if this does break bullish, these weird circumstances, these weird trading circumstances on the relative strength index make me feel like potentially if we get a bull break, we may get some resistance at this 50% retracement, right? Things are on the shorter term, the 1 hour, the 15-minute to the 1 hour time frame, things are a bit strange. So those are all my bullish and bearish scenarios for Bitcoin, guys. I tried to keep the stream as short as possible for everybody. I hope you enjoyed my presentation. Thanks so much for watching, and we will see you all on the next one.